Okay, thank you very much, Tanya. And good afternoon, everyone. And I'm very pleased and honored to be able to do this presentation. It's about a topic that I'm very excited about, and that is new instruments and models that we are seeing in private equity. It's something that we're doing some research on at the moment. And I'm happy to share some findings with you on that research that we're doing. I thought it was a good idea to have as a backdrop of this presentation, not the skyline of New York or of London that typically people would choose when talking about global private equity trends. I've chosen the skyline of Johannesburg, which is my city of birth. And I think it's also very representative of what we're talking about today. It is very much an emerging market, but it also is a market that will demonstrate some actual on-the-ground relevance for global trends in private equity. So what I'm going to be talking about this afternoon is some of those global private equity trends that we see and the effects that they have on emerging markets, and some of the new instruments and models that we're seeing as a result of that, and especially how those new instruments and models that we see globally in the private equity markets are relevant for emerging markets. I just wanted to quickly introduce myself. I'm a managing partner and founder of Goodwell Investments. We are an early stage private equity venture capital firm in Africa. And so a lot of the examples that I will be using, I must apologize up front, will not always be from a broad range of emerging markets, but specifically from what we see happening in early stage investing in Africa, and also in India, where we also have some investments. And also there, we will just illustrate that with some examples that we see. What is also always interesting to see in emerging markets is typically the trends and instruments and models that we see emerging from developed markets will then land in emerging markets typically a bit later. So if you want to, as the Chinese saying goes, if you want to know the road ahead, ask those that are returning. And that's exactly what we'll be doing here in this session a bit, just looking at what we see happening from those that have already traveled into the future that lies ahead of us in emerging markets. What's interesting to see in emerging markets is that we see ecosystems, investment ecosystems maturing and not at the same pace. So typically what we've seen is the private equity sort of sector started to grow primarily in developed markets, the US, Europe. And we saw sort of in more recent decades, we saw China emerging. We've seen sort of India emerging. We've more recently seen Latin America really gathering a lot of momentum. And it's only sort of the last ecosystem that is on that same trajectory of development is Africa. And so it's very interesting to see what trends we see in one emerging market, and we can already predict that in the next few years, we would expect to see those same trends happening in other emerging markets. So that for a bit of context. And then if we can go on to the next slide, then we can talk about some of those global private equity trends. Don't worry, I'm not going to talk about all of them in detail, but just wanted to highlight a few that are really relevant for the state of play in private equity globally at the moment. Increasing supply of capital is really what is shaping the private equity landscape. We see fundraising going up, we see fund sizes going up, deal volumes, prices, dry powder, and risk appetite are currently on the up in the global private equity sector. Although we're in the midst of a pandemic, we see really that the private equity sector globally is on a rebound. Actually, if you look at the numbers from comparing 2019, 2020, and where we currently stand, of course, there was a bit of a dip when the pandemic broke out, but the recovery in the second half of 2020 was very strong, and we can still see that recovery that we also see in public markets, very, very much so in private equity markets. And that is a global phenomenon that and although we see some K-shaped kind of recovery patterns, so it's not happening across all private capital markets, but in private equity itself, we see that kind of a pattern. At the same time, on the demand side of capital, we see that the geographies are not as limited as they were before. We see also very sort of off the beaten track kind of geographies now suddenly showing a lot of appetite for private equity capital. And we see also capital flowing there. We see different type of growth models that are also in these markets that typically the more conventional growth model of if we look at early stage, we would see sort of a typical B2C tech business following a very predictable growth path, or the average sort of growth path being very predictable. Now we see financial companies, B2B businesses, even agri-businesses following all sorts of different growth models, and also therefore having different kind of demand for capital patterns. We also see the funding stages broadening. We used to see the seed stages, for instance, typically constrained to, say, some angel investors. Now we see a proliferation of angel-sized funds, seed funds. We see specific very early stage deals that are happening in the institutional space. On the other end of the spectrum, we also see a much later stage investments happening as well. We're now seeing not just Series A, B, C, and sort of the first half of the alphabet. We're also seeing Series K and later happening. At the same time, we also see the sector focus broadening. We see a lot of convergence of different sectors. And an example of Grab that I will use later on in my presentation is a really good illustration of that, where sort of financial services, mobility, logistics, all sorts of other sectors are converging into different businesses, and therefore also widening the sector appetite for private capital. We also see capital structures changing a lot in private equity. The typical sort of conventional ways of capitalizing company have broadened significantly. And as we're discovering now, there are many different ways of layering the cake. And last but not least development that we see in the global private equity markets is ESG and impact. Those ESG used to be a sort of a label that some people at the end of a corridor used to be sort of busy with. Now it's a fundamental part of every investment strategy. Same goes for impact. It used to be something that was very niche, and we're also seeing that those that part of the investment landscape is not just a little niche anymore. It's really becoming much more mainstream, and we see larger providers of private equity capital also taking note of that. But that's also because we see a large and much broader demand for impact-driven investment capital. Those are the kind of broad trends that in private equity that we see that also have a significant impact on the investment models and instruments that we see in use. And that's what I would like to talk about on the next slide. So when we talk about these global private equity trends, the immediate effects that we see have a number of dimensions. First of all, it's about access to capital and access to deals. So when demand meets supply, it's the capital looking for deals and deals looking for capital, and how do they find each other? And there we see also a really sort of a shift happening, and private equity really these new sort of broader ways of finding each other that trend is really accelerating right now. And one of the sort of international examples that we see is private equity funds and hedge funds, for instance, moving into venture capital. We see also broadening on the other side. For instance, we see a lot of parties from infrastructure moving into private equity, or private equity firms moving into infrastructure. It's that broadening of the scope, which also means there's a increased access to capital on one end and to deals on the other end. We see also new parties doing much more direct investments, like sovereign funds, pension funds, family offices, corporates. A lot of those parties are really engaging in direct deals much more intensely. And we see some intercontinental partnerships also emerging, such as an example that we have experienced ourselves is that we in times of pandemic, when on the one hand we're much further apart from each other, on the other hand we need to be much closer when we invest in companies together. And we've seen the partnerships being much tighter, and the way that we collaborate with parties on deals, and the way we syndicate rounds right now is much more collaborative than it was before, much less competitive. And also when it comes to, for instance, doing due diligence on the ground, the ability to partner with a local partner and not having to travel internationally to do due diligence has really meant that those deals, that those structures have enabled deals to happen. We also see the platformization and of private equity platforms, and of course we see that typically in venture capital with the likes of AngelList and other kind of platforms. We also see that with co-investment structures that are becoming much more popular. Recently, I saw a number of about 40% of LP capital being channeled through co-investment structures internationally. Next slide, please. So an example of that in the African VC context is one that where we see a really rapid growth of capital flowing to African venture capital. And that's the next slide, please. If you, this is a statistic that comes from our friends Maxime Bayen and Max Cuvillier, who are one of the sort of prominent data providers for venture capital in Africa. In 2019, we had just over little over $1 billion in venture capital invested across the continent. This year, 2021, it took only 21 weeks to reach the same number. And that is that's how fast this venture capital sector in Africa is growing, and you see that the speed with which that growth is happening is also increasing. Well, thank you. For the next slide, then. So, what does this mean for emerging markets, and how does this translate to things like velocity, liquidity, and investment models? First of all, this velocity, so the high velocity VC is a trend that we see globally. Companies like Tiger Global, who are sort of doing sort of transactions, a few transactions in a very short period of time, doing a large number of transactions, I should say, in a very short period of time with very high amounts of capital. Also, just this high velocity investment also means very low touch, but very and high valuations, very rapid turnover of capital. We also see capital as a service, data-driven private equity models. Also, even recently I heard about a firm that actually has the algorithm as an official seat at the table in the investment committee that determines investment decisions. That high velocity of capital is something that we will also start seeing happening already in emerging markets. We'll talk about that a bit later. When it comes to liquidity, the special purpose acquisition companies, which are essentially blind pools of blank checks that are listed and then hunt for an acquisition target, are instruments that we see in emerging, primarily in developed markets, but also now moving into emerging markets. And one other element is that investment models, where typically we would have a 10-year sort of 2 and 20 model for venture capital, for instance. Now we see all sorts of bespoke models where we see permanent capital, pledge funds, and some public-private transactions. So on the next slide, I would like to give some examples of what we see happening there in emerging markets. One of the examples of high velocity VC that is sort of like the Tiger Global of Africa is a firm called Keppel Ventures. They are actually the most active venture capital firm in Africa at the moment. They do a deal every 2 weeks, have a very not a very huge team. They just do it very rapidly, and it's a clear example of taking that Tiger Global model also to Africa. When it comes to SPACs, we've seen that also happening in emerging markets. Actually, one of the largest SPACs or one of the largest SPAC deals that was announced earlier this year is the one of Grab, the Asian mobility company that also actually has a focus on financial services, and they are one of the largest at the 4 billion listing. The listing got a bit delayed recently because of needing to complete audits. But this is a really good example of how the liquidity constraint that you typically see in emerging markets can be overcome by using these SPACs and finding a much faster way to market than you normally would be able to do in a conventional IPO. I'm seeing that myself. Two of my portfolio companies in India are currently in an IPO process, and it is sometimes really long-winded, and it can take 1 to 2 years, even in terms of preparation and before it's done. A SPAC you can list in a few months, and the ability to actually not just do an easier IPO, but also just have easier access to capital for the businesses in the emerging markets. One of the requirements you often see in IPOs is that a company is cash flow positive or is profitable. If you want to do have access to public markets without having a profitable company, a SPAC is a very good instrument to do it. And the other advantage of a SPAC that we also see increasingly as useful for companies from emerging markets is that quite often in the SPAC structure, it is led by not just by a private equity firm, but also sometimes by operators. And that means that you can actually really list a company and combine the original business with a support from very hands-on operators. Another really interesting example of SPACs in emerging markets is Dila, which is a Mexican venture capital firm. They've raised a SPAC of $50 million in the US. Recently, they actually only sort of closed last week. And that's really an interesting so that was the short part of my presentation. The conclusion here is that what we see happening in the international markets is coming to emerging markets, and it is happening already as we speak. So when you are active in emerging markets and you think that SPACs or other new instruments are something that's only happening in the US, that's not the case. It's also happening in Europe. That's not the case. It's also happening in emerging markets as we speak.